Welcome to Resistant AI's event series, where we will arm you with the knowledge you need to fight today's increasingly sophisticated financial criminals.
Welcome everybody. Welcome to this, the fourth in our series of Bright Talk events. The series is entitled Fighting Financial Crime in an Automated World. My name is James Broadhurst, Principal Consultant with Resistant.ai. Today's session is called Launderbots, or Why Your AML is No Longer Fit for Purpose. So in previous episodes, we examined themes such as the explosion in cybercrime, how financial crime and cybercrime are converging. We've looked at some of the ideas that might be useful to help you make best use of artificial intelligence when seeking to counter those threats. And today we're going to focus in a little bit more on AML and financial crime compliance. Specifically, we want to look at how recent evolutions in financial services might lead us to reflect on whether our AML practices need revisiting, perhaps even need a reboot. And just to note, if you have any questions relating to the session as you're watching, you can put them in the panel at the bottom of the screen. As long as you're not in full screen mode, you should be able to see that panel. And talking about panels, let me introduce our panel today. We're really pleased to be joined today by Jan Filiperts from Currency Cloud. Jan is VP of Compliance Operations there at Currency Cloud. Welcome, Jan.
Thank you for having me.
You're very welcome. We also have our own Kathy Gormley. Kathy is Principal Solutions Engineer here at Resistant.ai. And Kathy's got lots of many years experience working in financial crime prevention, having worked for several RegTech firms where she was involved in the sales and also design and delivery of financial crime solutions across a wide variety of verticals. Welcome, Kathy.
Thank you. It's really good to be here and I'm looking forward to the discussion.
I am as well. Thank you very much, Kathy and Jan. So Jan, if you don't mind, maybe you can tell us a little bit about what Currency Cloud do and what you do in Currency Cloud for the audience who perhaps are not familiar with your organization.
Sure. So Currency Cloud, we are a B2B to X embedded cross-border payment platform. And that means that basically our core product is an e-money wallet with a number of pay-in and payout capabilities that we source from a range of tier 1 banks, as well as some other MSBs. And as you mentioned, I look after compliance operations at Currency Cloud. That means that we basically have our compliance policy team with our MLRO who deals with the what when it comes to AML, what regulation, what risk appetite. I deal with the how. How do we now do this on a day-to-day basis?
Excellent. Thank you very much, Jan. Great. So let's begin. And we wanted to begin by reflecting a little bit on the fintech revolution, or the revolution that financial services has undergone in recent times, in recent years, and what that might mean for financial crime management. So fintech, the advent of fintech, service providers who are providing innovative ways to perhaps compete with traditional financial methods. We've seen a huge period of innovation in this area, largely powered by the growth of the internet revolution, the extreme adoption of mobile and smartphone technology. Whereas fintech, perhaps at the beginning, was referring more to the computing technology that traditional banks or trading firms might use, it really now covers a really broad variety of technological interventions or innovations in both personal and commercial finance. And we think that this innovation ought to be, maybe is affecting financial crime management also. The financial services in the ecosystem has altered dramatically. And that's, we're really pleased to have Jan here today from Currency Cloud. A pretty good example, I think, of that innovation and an example of fintech in action. So on that point, Jan, would you be able to tell us a little bit more about, within your B2B to X organization, how you fit into the financial services ecosystem, and then perhaps elaborate a little bit on what that means in terms of how you address financial crime management in Currency Cloud?
Yeah, sure. So, well, no surprise. I think we sit in a very interesting part of that ecosystem of, as I mentioned earlier, we're B2B to X, and we have that e-money wallet with pay and payout capabilities that we sell to a number of different clients. We sell this to some other regulated payment institutions, think your neobanks, for example, where we work with them in what we call a correspondent model, or basically they're the regulated entity providing the service to the end users, and they just use our payment network, our ecosystem of banks to execute on those transactions. At the same time, we work with some unregulated clients where Currency Cloud provides the regulated service directly to the SME or the individual. Examples here are, for example, wealth techs, who are regulated as an investment broker but don't have a payment wallet license with it. So we see a wide range of the whole different parts of fintech, from the challenger banks, wealth techs, lend techs, and so on, because we kind of help solve that payment element for all of them in slightly different variations.
Mm-hmm. No, that's great, and it's just very varied. I think we can all pick up on that. Does that mean that when you're looking at financial crime management services that you perhaps need to be adapting the platforms you use, or perhaps that one size doesn't fit all? What would you say about that? Do you think your kind of business model is a little bit different in terms of how it uses AML platforms?
Yeah, for sure. And it's how we ended up basically building all of our AML systems in-house, because we have those multiple layers in our customer base. It's not as straightforward as a B2C player where there's a lot of great providers out there. We monitor our clients, but also our clients' clients, because when we're talking about a challenger bank, of course, the AML risk is not the challenger bank, it's their customer base. And how do we most accurately monitor that customer base? Okay,
that's great. So you've kind of got two models where you're dealing and managing that risk directly for the end customer, if you like, but then you also have your business customers in the middle. Interesting.
Exactly.
Complicated as well. Kathy, you got a lot of experience in positioning and implementing these kind of platforms.
Mm-hmm.
Leading on from that topic about off the shelf, or whether you need to have perhaps a different approach, how do you see it?
Yeah, and no, it's a good question. I think from a systems perspective, when we're deploying financial crime systems, there's often a desire to leverage standard solutions, or what we call off-the-shelf solutions. And the reasoning for this is kind of twofold. One, from a financial perspective, I think there's a bit of an allure to keep with the standard to reduce the costs of systems, but there's also a complexity angle as well. So the closer we keep to standard solutions, we reduce the complexity of the deployment and can deliver or implement faster, essentially. I think this was actually more of a thing when we were dealing with on-premise solutions, where people were terrified of customization, because that essentially meant that you have hideous upgrade paths and you create complexity down the line. So I think it's changing a lot as we move to cloud-based solutions. However, when organizations like Currency Cloud and others are looking at solutions, I think they really need to, of course, critically assess whether these solutions are fit for purpose and are fit to address the risks specific to your organization, depending on whether you're B2C or B2X, etc. Mm-hmm. And I think one of the key things is when we say standard, I think that's a lot different nowadays, because is it standard for payments operators? Is it standard for neobanks? Is it standard for traditional financial institutions? So I don't think, when we talk about out-of-the-box compliance, I think what we mean is very different. And actually on that point, one of the things raised by the Financial Conduct Authority last year, albeit to its retail portfolio, but addressed this whole no one size fits all. They identified numerous weaknesses across the entities they supervise, and one was around their transaction monitoring controls. And they identified numerous cases where firms were using out-of-the-box solutions that hadn't been calibrated appropriately. So I think they used the word arbitrary thresholds and things like that. So it just reinforces the need to identify solutions that can address your specific risks, or indeed, if that's not the case, like in Jan's scenario, build or augment standard solutions to make sure that you are truly addressing your unique risks, because it's not all the same.
Yeah, it's a really interesting point, and it's basically a data problem, and it all starts from your data, and you need to look at your underlying customer base and their transactional behaviors. So one of the first things we did when we built our own transaction monitoring system is work with a number of data scientists, where we gave them, here's 5 years worth of data, tell me what's happening. Tell me what I don't know. I know the typologies that the regulator tells me. Now tell me the stuff I don't know, and kind of go and build from there, rather than quite often, if you go to your traditional transaction monitoring system providers, the conversation is they ask you which rules we want. No, you tell me which rules I need based on what you actually see happening in my transactional database.
That's really interesting, Jan. Just a quick follow-up there. Do you think that the challenges you've just described are made easier by the advent of more cloud-based services? Is that something that you'd agree with?
Yes, of course. Like it all comes down to like accessibility of data, because for example, what I just described is also almost easy for me to do as a fintech, where I have a very clean data set to go and hand off to someone, because we've all, cloud native and so on. If you're built on big legacy systems, it's a lot harder to get that clean data set out to give to anyone to go and do some of the very interesting data science thing, mumbo jumbo that they do.
Yeah, I think you're in a lucky position, as you said, that you're more agile than perhaps some of the more traditional organizations that we might come across. But yeah, I think going back to what Kathy was mentioning about the reluctance of, well, the willingness of people to take the off-the-shelf packages, which, and I've been guilty of this in past roles, that those are very attractive for a series of reasons. I think it's safe to say, Kathy, that that is a bit of a slippery slope, especially if you take something which is a starting point, but never then actually spend any time keeping up to date as regulations change, as fraud and money laundering patterns change. Is that a safe assumption?
Yeah, absolutely. I think, standard solutions are a really effective baseline and start point, right? No one wants to start from scratch, but it is absolutely incredibly important to be able to adapt those solutions, and in your vendor selection, understand what level of configurability is supported and how you can mold these systems to make sure that they are fit for purpose. And that's not just, at the beginning of the implementation. We all know that we have to adapt and change as the threats do. So being able to understand how easily your system can adapt and be updated to deal with the evolving landscape, whether it's the landscape from a financial crime perspective or indeed a regulatory perspective. So yeah, there are two things, not just at the initial vendor selection and the implementation, it's an ongoing need.
Yeah, I think that's a good point, not to treat the deployment of such a capability as a one-off project, but more like an ongoing exercise. Great. So moving on, what we wanted to touch on was to look at some of the success factors, or the things to do, or the things that you should have to try and keep up to speed with both changing patterns in fraud and money laundering, but also accelerating and altering regulations. We've seen that very recently with increased sanctions pressure. Coming back to you, Kathy, what do you think might be some interesting things to keep in mind when trying to address that challenge? Keeping pace with change.
So I think in terms of keeping pace with change, I think there's always going to be two key factors in our fight against financial crime. And I'm going to start quite high level here, but go with me. So one is the people. And I think the community of fin crime professionals looks a lot different to what it did 10, 15 years ago, where it was kind of dominated by legal professionals, investigators, compliance experts. But now we have technologists, we have data scientists, and everything in between. And I think that growth in the community and the diversification of the people and the profiles it's really important, and it's very much needed, because I think we really need to continue to welcome people of different views, of different backgrounds and experiences into the community, so we can kind of reimagine the way we combat financial crime. So I think, attracting the best people into the industry will really help us to reimagine that fight and bring further innovation into the community. And I think the other success factor, and they very much go hand in hand, but it is technology, of course. We are we're seeing an increased use of various different innovative technologies, but I still think we have a lot to do to kind of up our game and become more savvy with our use of data and technology, particularly as we see, the criminals are speeding ahead. They are using increasing sophistication and adopting the latest and greatest technology innovations, and we need to keep up and to be able to match that sophistication. And I think, it's the right balance between the human elements of the technology, and they do really go hand in hand, because we need the best people, like Jan was talking about, these clever data scientists, but we need the best people to tell us how to make appropriate use of our data and technology. Equally, we need technology to be applied in the right places so we can let our people do what they're fantastic at. So I think it will always be those two kind of broad areas, and I'm sure there's a lot more detail we can go down into, but people and technology, I think, are key. So
people and tech, yeah, I mean, I think if people have been attending the other episodes in this series, they'll have already heard that here in Resistant we're very positive towards using AI, using analytics for what it's good for, but not forgetting that the human element, that people are very good at some of the things that the machines are not capable of doing very well. So just to turn back to Jan, I mean, do you kind of agree with that? Those levers, as you might say, the people, their work rate, their bandwidth, and the technology as well, being critical when you're looking to perhaps scale up your business, perhaps when you're trying to deal with the the onslaught of attacks and money laundering patterns. How do you see it?
Yeah, I definitely agree. It's a combination of the tech and people. And when it comes to AML, the purpose of tech development is not to replace people out of the process, or it is to make them more effective by giving them the best, most filtered out alerts that they should be looking at, and then giving them the best tools to investigate those alerts. Because as you mentioned, as you scale, as any company scales, and as being in an operational compliance function, there's three levers that I have to scale with, and that is just put more people into the process, which a lot of friends of ours in banks have done to solve these problems. There is how much can one analyst really process? And again, you can just kind of try and just beat that drum harder and harder and push more out of them. But that's the wrong way to look at it, really. You should think of how long do you really think it takes an analyst to accurately review an alert? And if you say that is, okay, 5 minutes, 10 minutes, whatever time that might be, depending on your business, that's a finite number of alerts that an analyst can process in a day that you think is meaningful alerts. So that only leaves you with a third lever, and that is your alert rate based on your transactional volume. And that's where your tech needs to come in to make sure you're not just creating a whole bunch of noise, because that doesn't just create more work, it actually creates more risk in your organization, because the more alerts an analyst looks at and the more alerts you churn through, the higher the risk is that they just start missing things, because I've just approved 100 alerts that I see every day pop up, and I know it's all fine. The 101st, where there is something different, they'll miss because they're just gone into that confirmation bias of it's fine, or I'll reject because it's not okay. So you kind of want them to look at the right number of alerts with a fresh set of eyes every time. Sure.
Yeah, so we're seeing there the combination of people, feeding that sort of knowledge into defining how your alerts should be working, and then using the best tech possible to make sure you keep the volumes of alerts down and you're focusing on the right thing. So leading on from that, would you say that you're an advocate of the use of artificial intelligence in a selective way then within Currency Cloud? Is that a fair kind of statement of where you're at?
Yes, in a particular viewpoint of it. I think there's a lot of buzzwords been thrown around in AML as well, around AI and money laundering and machine learning, where it doesn't really mean that much. When it kind of comes to the fraud space, yes, there's amazing things being done. When you kind of think around AML, it's a bit harder. You do not have the data set. You do not know within 2 weeks whether a transaction was money laundering or not, as you do with fraud, because somebody lost their money and somebody will tell you it was fraudulent. So you can work from a point of view where you know, okay, these are my SARs that I've raised. So I'll use my SAR as a positive outcome to feed back into my model. And you start using the same data models or say machine learning in a way to kind of pick up on those things. It becomes very narrow, very insular very quickly, because it's a particular typology that you've raised and it keeps being fed back into the loop, where your money launderers are very smart people. The moment that they realize that we've plugged on, they've moved on to something else. So there is a place for AI in AML though, and that is in the anomaly detection. Now let's assume that your entire customer base aren't money launderers. So show me the ones that are doing something statistically different from everyone else. Show me the true outliers. Now there's a whole thing that comes with that, because you can look at your outliers as, you know, your standard bell curve of your standard deviation or your mean plus 2 standard deviations. Now your customer base isn't going to behave as a standard bell curve. So there's a whole bunch of things that come around of like, how do I now truly identify who the outliers are? What is weird? And that's where your AI and your data scientists come in, and they have a lot more place to grow and to kind of develop into that, because I haven't really seen that many people really cracking it. I think there's a couple of interesting players in the market looking at this right now, but there's still a big space really there.
Good. No, that's really interesting, and I think you made a good point there that looking at outliers, you also have to be careful that those outliers are not creating too much noise. So then the applying things like ensemble models to then sort of have other models working in unison to try and reduce the false positives that might come from not looking correctly at the outliers. I completely agree, and you know, here in Resistant, that's one of our big pushes, and also looking at how the machine can literally take care of very, very complex operations, such as looking for larger clusters of related transactions or behaviors. Is that something that you see some value in or have been looking at?
Yeah, definitely. It's something that we've been looking at quite a bit of, as I was saying earlier, as important as it is to look at the weirdness and the outliers, it's equally important to look at those clusters of behaviors. What if all of a sudden you have 10 people on your platform all sending money within the same hour to the same bank account in a different jurisdiction? That part of like that cluster analysis using those graph databases, that is really, I think, the next step forward, where I think quite a few people have kind of clogged on to that is kind of like the next big iteration that I see coming within AML, specifically using the big data or the data science elements of it.
Mm-hmm. And those are the kind of operations that the machine is good at, because it's you're looking across huge data sets in real time. So looking for that sort of convergent behavior, as well as looking for divergent, which is what what you're doing when you're looking at outliers.
Where it plays in the ecosystem, again, then becomes very interesting, right? Because we see we have pretty much every challenger bank in Europe and in the UK on our customer books. So we can start seeing these clusters on a bigger scale. So you can really start picking up this across your customer base, not just within one particular client or one particular segment.
Mm-hmm. No, that's a very good point. Thanks, Jan. Just switching over to Kathy, as a kind of a follow-on from that, what do you think about those topics?
Yeah, I mean, with regard to the use of AI and machine learning, I think given the volume and the variety of crimes that we're facing, our current systems can no way keep up there. They haven't been successful in adapting as quick as the threats in the landscape have been. So I think the use of AI and machine learning is very much needed going forward. I do agree with Jan in that, we haven't seen, whilst we've seen it be really effective in pockets of financial crime prevention, definitely in fraud, because the data is there and there's definitely further opportunity to leverage the full benefits of artificial intelligence within anti-money laundering, and absolutely looking at those types of behaviors, the as I think Jan, you called it before, the convergent and the divergent. And I think the unique position in which Currency Cloud are in, to be able to see across institutions the behaviors is fascinating. I think there's a lot of power in that. But yeah, I think we have a bit of a way to go before we see, it going from just the buzzwords and people say, oh, I'm using AI, and it's like, to do what, to achieve what outcomes. So I think there's a lot more of a push necessary to fully embrace the use of artificial intelligence, particularly in the anti-money laundering space. But I'm confident that we're getting there, and that people are really seeing the value and how it can play a role within the wider kind of control framework.
No, that's interesting. Thank you, Kathy. And just to extend that sort of into our last topic as we get towards the end, what do you think the role of, so we talk a lot in AI about explainability, and often we think that is just being able to explain decisions being made by the machine, by analytics to regulators, but it's a bit more than that, isn't it? And maybe you can give us some insight into, because I know you read around this a lot, what are the regulators saying, and is there any guidance out there as to what or how, AI should be used for financial crime management?
Yeah, sure. So with regard to AI and explainability, I think we hear explainability a lot in the context of regulators as being one kind of key stakeholder group. But I think when we talk about the application of artificial intelligence, particularly within the field of financial crime prevention, I think we need to look a bit broader in terms of the different stakeholder groups. One key stakeholder group, and I'm sure Jan will agree, from an operations perspective, is the users of these decision systems. And I think the level of explainability means different things to different people. There was an interesting article by the FCA or FCA blog, the catchy title, explaining why the computer says no. And they talked about whether, what did they say, interpretability was sufficient in some scenarios for some stakeholder groups. So I can see why this has happened, but that you don't need to go down into the mechanisms as to how these complex computations have worked. And I think when we talk about explainability, we really need to think about what that means for the different stakeholder groups. And from an explainability standpoint, I think it's becoming key in terms of the actual adoption of artificial intelligence, bringing people on the journey and giving them confidence and trust. So I think it plays a huge role there. But at the same time, I think we can't let it hold us back. This perfect understanding of how the machine works. And I've heard people talk about it as in, holding AI to superhuman standards. It's very hard to explain exactly how you got to a decision. So I think, that expecting the same of some of the complex computational magic that these machines do. So yeah, it's a really interesting topic, and I think we could probably go a lot more into all the nuance. I'm definitely not qualified to do so, but I think it's something that's going to be a topic of conversation for a long time.
It's interesting because I think we kind of agree amongst ourselves from this conversation that when you're talking about preventing fraud, it's a little bit easier to train the machines, to train analytical models to actually separate good from bad, and therefore we kind of accept that works quite well there. Is it different in other types of financial crime? So talking more about sanctions, money laundering, this kind of thing. Do you think we're at the point where we should just kind of get on with it and trust the basic analytics, the basic AI? Do we need really to have full white box explainability, or are we willing to accept something perhaps a little bit in the middle? And I mean, it's probably a bit of a direct question, but do you trust the AI, or what levels of explainability do you go to in Currency Cloud?
Yeah, it's very easy to hide behind the model as well. Well, why did you only have 10 alerts to look at this month, even though you have hundreds of thousands of transactions? Well, the model told us that these are the only ones that we really need to look at. So you kind of always need to have that level of explainability, but not just explainability in a sense, okay, it triggered because variable 1, 2, and 3 behave together, but variable 4 nulled out variable 9, okay, that's a technical element behind it. It's the justifiability behind it. Why is it now? Why did you build your system in such a way that it values certain things over others? And that's where I think there's a number of stakeholders in that, as Kathy mentioned. There's the regulators, there's your users, but for us, there's also our banking providers. So we have a wide range of banking providers. They are quite keen to make sure that we understand and our AML and our AML controls are at a point where they can kind of trust us to do our job. They, of course, have their own obligations to still do their money, their monitoring and so on. But when they come and review us, as well as when our auditors come in, if I just tell them, here's the machine with a bit of code that we wrote, trust us, it's fine. Not sure we're quite there yet.
Yeah, I think we're on that journey, aren't we? And Kathy and I were talking about this in prep. I think there's a good analogy as well with the way we trial drugs. You know, so do we get to a point where we kind of trust the scientists? I mean, Kathy, what's your view on that? How close are we to have some basic trust in the analytics?
Yeah, no, that was an interesting, I think, example of where people were trying to talk about the trust and the importance of trust. And I think the examples around that we have no definitive scientific understanding of how some highly successful drugs work. And you may argue that maybe some of those who develop them don't have that detailed understanding either, but they said that we just know they work because we've done rigorous and incredibly effective testing of the outcomes. And most of us are, happy, therefore, to take the benefits because we have done that rigorous testing and we have the confidence in the performance. So, yeah, I don't know if that's also something to be applied to this field, but I do think, there'll be quite a few conversations before we get to the point where we all agree what trust means to those different stakeholders and, give people the right levels of confidence. But I think it is a journey, as you said earlier, to bring people on and to get them more comfortable that it isn't just a black box of magic, that they can trust what's happening behind the scenes. And as Jan said, it's not just about the outcomes, it's the process and being able to get comfortable with the process in which we're training the models, the data it's based on, and that overall approach to developing these models. So yeah, there's a lot to it, but I think we're getting there. We're having the conversations. I think, a few years back, I think it was just like AI, machine learning, and it was all, a bit of smoke and mirrors or magic and, oh, I'm using AI, but I think we're getting a lot closer today and having the right conversations.
Yeah, and I think that's what it's about. And I'll give a chance, Jan, a last chance to maybe throw in some thoughts here. But I completely agree. If you go back, I don't know, maybe 5 years, maybe 10 years, it was kind of assumed that AI could solve all of your problems. And now we're at a point where I think we're looking at it in a bit more of a refined way. It's certainly one of the things we try to bear in mind here in Resistant. Excellent, brilliant. Thanks so much to both of you, to Jan and to Kathy for participating in this. Just to remind people listening, if you have any questions, put them in the box below. And just to mention that our 5th session will be pivoting over to talk a little bit about buy now, pay later, or as the session is titled, Buy Now, Pay Never. So you can probably guess from that, we're going to be talking about how to fight fraud in real time with limited data within neobanks and neofinance. Thanks so much to the panel once again. Thanks for listening, and we will be with you again soon. Thank you.
Thank you for attending. Please visit our Bright Talk channel where you'll find details about our other events. Please be sure to rate this session.